What's up, everyone? I'm not sure if we are live or not. Are we?
We are live. I'm checking right
We are
now.
live. Okay. It wasn't showing on my end. Sorry about that. If you can see us live, please put a 1 in the chat. That way I know for sure. I was trying to use OBS Studio. It did not work out clearly. So we're back on StreamYard. I had this whole nice setup for y'all. My bad. That is 100% on me. If you are brand new, welcome. Welcome to Money Market Truth. My name is Mark, and this is
Mo.
We are a YouTube channel that's focused on everything money, mostly stocks. I am considered the investor. Mo is considered the trader. And I want to be a little clear. If you're brand new, once again, please make sure you subscribe. Just tell you a little bit about us. When I talk about investing on my side, I'm specifically talking about anything within the next year. So we do a lot of price predictions here. When we could say, the market's going to go up. Eventually, SPY always goes up. SPX always goes up. The S&P 500 always goes up in the future. We all know that. That's just a kind of a known fact, right, Mo? That's pretty much how everything goes. But what we're trying to do here is we want to give kind of price predictions within a year. So every time we talk about price predictions of where we think a stock is going to go, this is within this year. So in 2023. So just because we say, hey, I don't like Tesla, does not mean that we don't think that Tesla is going to be $300 in 5 years. It most likely will, but we're talking about when can you get the best prices right now, essentially, and when you should be buying. Because for the past year and it's been like a year and 2 months, Mo, where it's been basically just a downtrend. So, and everyone's been telling you guys, buy the dip, buy the dip. And I know it sucks because you've been buying a falling knife, essentially. So I just want to kind of make it clear of who we are. So once again, thank you so much for stopping by. We have Mo here today. We're going to touch on a few topics first, and then we are going to get into teaching you guys how to trade and how to get these price predictions when it comes to the investment side of things. Real quick, I just want to touch on WWE. Mo, have you heard about WWE?
Yeah, I think it was sold to a private firm in Saudi Arabia or something. Is that correct?
No, that was actually rumors that someone on Twitter actually posted that. It could have changed by now, but that was actually one of the predictions that I had, that a Saudi Arabian company is going to end up buying WWE. I just dropped a video on my channel, which I was renamed, by the way, is now Uncultured Currency. If you check it out, I have a WWE video that I just dropped a couple of hours ago. Gives you kind of a lot of information, a breakdown of the company itself and what my thesis is on WWE and where it's going to go. But I do think it's going to end up being sold to a specific company. But I'm going to pull this up real quick. So yesterday, the WWE Board of Directors unanimously elected Vince McMahon executive chairman of the board again. And if you're familiar with the story, we spoke about WWE quite a few times here, right, Mo?
Yeah.
We talked about it, several months ago, because I was talking about how good of an investment it is and how it's beating the market for the past 2 years. So if you missed out on that, that kind of sucks. So, but yeah, there was rumors going around. Some Twitter guy said that WWE just got bought by Saudi Arabia. That's not true. But the big point here, where I want to put up there, is that Stephanie McMahon actually took over as a chairwoman of WWE after the whole Vince McMahon scandal. And she resigned yesterday as well. So that's kind of unfortunate. Clearly, there's some drama going on within the family, but Vince McMahon is now the CEO of WWE again. We'll see what's going to happen from there. Funny thing is, I actually was on the phone with Mark, and he was telling me that apparently XFL still exists. Have you ever heard of that, Mo?
XFL? No.
Yeah, man. It's WWE's, I guess, third time attempting to start their own NFL league. So he did it first time, what was it, like early 2000s, and it was a complete flop. And then he did it right before the pandemic, and that was a flop as well. He spent a lot of money, millions of dollars was invested into it. Actually, a lot of shareholders didn't like that, and the stock actually sold off because of that, the debacle of XFL. And I guess it's coming back again starting next month. So we'll see what happens there. But I'm very curious on why Vince McMahon came back. It seemed like he was retiring, but once again, he's here. So we'll see what happens. Right now, the stock is literally on a run. I recommend not buying it right now. Again, it's not financial advice. We're not financial advisors, but looking at it, you don't ever want to buy stock at the 52-week high, correct? No, you shouldn't. You shouldn't. So
trading, yes. If you're investing, I would wait. It's sort of like buying Apple at 180.
Yeah. Yeah. How did that work out for a lot of people, right? It's down. But yeah, so Mo, he's going to cover the CPI stuff real quick, and definitely let us know if the audio's off or anything's off. Again, I try to do this all through OBS Studio. It did not pan out. So if there's like an echo or something, please let us know. That way I can fix it real quick. So over to you, Mo.
All right, let's add this to the stream. All right, so we'll get into CPI. I just want to talk about something that just popped up on my phone, like just before our podcast. So Biden is actually speaking tomorrow at 10 o'clock, and he will be speaking about inflation. So let's go back in time, right? Every single time we've had CPI data and the data was going to be high, we got a statement from White House saying that the data this time will be high, but because it's backward looking, future data will be a lot lower. Correct? That's what I think we've seen that 3 or 4 times. However, this time Biden is speaking. This announcement just came up right now. In my opinion, that's how I analyze news, and I'm not taking any position based on that. And you can't. The market's closed. But there should be no reason for Biden to come up if the inflation data is high. Make sense, Mark? He would only show up if it's low. Because in the past, I'm just watching trends. In the past, every time it's been high, they just issue a statement. And I think if he's coming on, of course they know the data. I think CPI tomorrow will be low.
Well, I would say this when it comes to Biden coming on, he might just come on just to kind of brag about how the economy is doing well.
Yeah, that's what I was thinking.
Yeah, so I wouldn't. I don't know, man. I don't know how much effort I would or energy I would put into him speaking. For one, he's a terrible public speaker. But yeah, secondly, I don't know, because I remember last time when he spoke, it was one of the worst days of 2022. The market was like completely like sold off like 3 or 4%. He's sitting there talking about how great the economy is doing and gas prices are down and the stock market's doing well as the stock market is selling off. So we'll see.
You're correct about that. So his speaking doesn't matter to the market, but the fact that he's coming means the data most likely will be lower. I'll read what came through. U.S. President Joe Biden to deliver remarks on inflation economy at 10 a.m. Eastern time on Thursday. So what I'm saying is the fact that he's showing up tells me that the numbers most likely are lower, because in the past when they've been higher, he doesn't show up. They just basically send a statement stating that the numbers will be high, so people don't panic and sell, which makes sense why all these bullish flows showed up. But again, anything can happen tomorrow. I've got the chart pinned for you guys here. This is the SPX daily chart, and I will make it super easy for anyone that's watching. So this is a daily chart. We're just looking at it without any indicators. What you want to look at is for support and resistance. I'm using 50 MA moving average, and I'll draw it. So I mark it. So it's 39.10. That's what the 50 MA is. If this breaks tomorrow, we can see a leg lower, and I think it continues for days. The 200 moving average is, I'll mark it as well. That's 39.90. That will be a resistance. Tomorrow, I believe the high of the market is 40.50. That's the extreme. I think we get anywhere from 4,000 to 40.30. So I'll go over both scenarios. So let's say if the market opens at 40.30, I will watch for 4,000 to break, and then I would watch for 39.90 to break. If 39.90 holds, I will not go short. I will buy the dip. If 39.90 breaks, I'm looking to buy puts all the way till 39.10 for tomorrow. I personally think that the flow has been very strong when it comes for bulls, but everyone will be offside if we drop. So the pain side is for us going down, because if we get below anything over 6.6, I think we could see a massive drop. I would say you're looking at roughly 100 to 150 point drop if that happens, in my opinion. So for starters, we could see 3,800 tomorrow if the numbers are bad. The best case scenario for us trader is a fading move. What does that mean? We gap up and we fade all the way down, or we gap down and the dip gets bought. Those are the best for traders. So just watch out for that. Don't go in with any bias. Keep an eye on the moving averages. They tend to be very good support and resistances. That's one. Second is I want to tell you guys why this is happening, and it'll make sense once I'm done. So last year, all the funds, majority, underperformed. While SPX was down close to 20%, most funds were down 40 to 50%. Some just went broke, right? Now, this year started and most funds are not invested. They're sitting on the sideline. SPX is now up 5%. and they're not invested. So all of a sudden you have this FOMO of people buying, people getting in. I'll take Kathy's example. Kathy's been buying Tesla stocks and nonstop. There's other funds that you're seeing major dark pool order, they're getting in. Do you know why they're getting in? Mark, you know this, but like, just do you think any other reason you think they might want to get in? That SPX is up 5%.
Well, I mean, we don't know exactly when the bottom is, right? So we can never time the market. That's the biggest thing. So it's currently sold off significantly. So it's better just even trying to establish a position versus
Yeah,
missing out.
yeah, that's amazing. And when we had Afsha, she talked about it too. They cannot underperform an index. If you come, if Mark, I want to sign up Mark as a client, and Mark's going to be like, yo, you're performing at 3%. I could just put the money in SPY, and SPY is already up 5%. So I lose business. So I need to make sure if I'm not overperforming, I'm at least matching my performance with SPY. So that's why watching SPY is crucial. Watching these moving averages are crucial. If we go above 200, funds will buy. If we get below 200, funds won't sell because this happened overnight. But if we get under 50, funds will start selling, getting out again. Because the last thing you want to do is, instead of being neutral, now you're down for the year. So very interesting concept. It's away from charts. And that's why I think a lot of people lose money, is because they're looking at a 5-minute candle versus looking at what's happening in macro. Mark brings a good point. Everyone was bullish last year. Why? Because they're looking at charts. If you go look at last year January chart, so this is our January chart, right? Look, draw a trend line anywhere. So this is what your chart's saying. So what do? We're bullish. Like, you can draw the chart 14 years back. We're bullish.
Yeah.
So why would you buy puts? Because you're following the chart. Chart's telling you what's happened in the past. It's not telling you what will happen in the future. And that's why you need other indicators. There's no one true source of any kind of indicator that will tell you what will happen. So you have to kind of watch out what's happening. I think at some point we do bottom, and at some point everyone will be correct. But for now, everyone who's going long will be incorrect. There's a lot more down movement coming. And you can tell by just listening to big funds. Tom Lee issued a 5-minute statement, and a couple of things he mentioned were very alarming. So one thing he said was, even if earning goes down, it doesn't mean the price will go down, and that's never happened since 1950, which we know not correct. If earnings are shit, Apple will tank. Every company will tank if earnings are bad. Second thing he said was that if they halt the increase, that's bullish. That's not bullish. The interest, I'll talk about Canada. Our interest rate's so high that we can't sustain this. If we keep this for another 6 months to a year, a lot of my mortgage broker friends are saying most people are going to just walk away from the house, because a lot of these houses, Mark, they were like, when people were buying, they were 2.2, 2.3 million, just average house in the area, like normal suburbs. Not even, if you go in the main downtown area, we're looking at 3-4 million. But those $2.2 million houses are not more than 1.2, 1.5 now. So your down payment is basically gone. And so at this point, you have a choice of either going on rent or keep paying the mortgage. So I think a true measure of bottom would be if we halt, reduce, and then supplement with QE. So I think as long as they keep brainwashing people on thinking that that's bullish, we're heading down even more. And this is the most underhedged we've ever been, FYI. VIX closed at around 21, and we're at 39.88. Pain is definitely on the downside. If we get around 4,000 something, I will not touch calls. That's where I will start looking at Mars puts.
Well, let me get some pushback here, because I've been listening to CNBC. I apparently pay for CNBC Pro. I don't know how I paid $300 for that, but I got the pro version. And I saw a few articles where they're saying that we need to stop listening to all this fear mongering of that market is going to continue to tank, that we're going to be in a recession for 2 to 3, 4, 5 years, and that it's going to be flat. What's your thoughts on that?
That's what happened in 2008. I remember 2008 prices came down, and after the recession was over, and the only way you know recession is over is by looking back. When you're in one, it's hard to tell, right? Because it's happening to you. When you get out, that's when you look back. Oh, okay. After the recession was over, for the next 3 to 5 years, the average house, like where area we were living, it took 6 to 8 months for a house to sell. Houses weren't selling unless you were like overly underpriced or it was like a area that not a lot of inventory is available. But I think everyone has an agenda when you watch this kind of stuff. You have to ask what's their benefit. So if Mark's telling you that Tesla is going to 100 when you did 6 months ago, you got to ask what's your agenda behind it, right? You don't have any agenda. If you're wrong, you lose credibility. If you're right, you don't get anything out of it.
No, yeah, that was definitely a big hitter for last year. We definitely called that pretty. We were pretty good on that one. So, I like to pat myself on the back for that one. I'm gonna, yeah, we
But
did
yeah,
good.
like if someone CNBC saying we don't know, like I had this conversation with someone on Twitter, and I know like a lot of us think on Twitter that we're better than other people and we're constantly arguing and talking about it. But do you really think that Tom Lee is stupid or Jim Cramer doesn't know what he's talking about? I don't think that's the case. I just think that it's not in their self-interest to talk shit about the stocks that they own in their portfolio. So it's either better to stay quiet or encourage people to keep buying. That's
I
it.
agree. I agree
Right?
with that statement for sure. Yeah, absolutely.
Like I will talk about, I don't think I'm smarter than Jim Cramer or Tom Lee. I think they've got years of experience. So do you think every single time Jim Cramer says something, the opposite happens? It is like a coincidence. Like it happened once, twice, but it's happening. I think he's providing exit liquidity to a lot of these people.
Yeah, Jim Cramer is definitely whatever he gets into or talks about. You definitely need to exit. Speaking of that, by the way, is with analysts. We spoke about this on our podcast several episodes ago. I think it was you that mentioned it. That most people, when you see analysts that are saying overweight or underweight or whatnot, they're actually invested in that company. Correct? That's the only reason
So
why they're
I'll tell
speaking.
you what happened. Q came on in one of our lives, and Q said, "Do you know that an analyst can only upgrade or downgrade a stock that they have in their portfolio?" And that's what got me thinking. So if I say downgrading Tesla, I can't say that unless I actually own that in my portfolio as a fund. And Q knows because he works at the Wall Street.
Yeah. So
So,
my question to that about that is though, so if they're saying, "Oh, we're downgrading," why would they do that? What's your opinion on that one?
they're basically based on the conversation I had with Q, they are like there's certain people, analysts, and it's kind of like this is your major. You take care of this stock or this sector, and
Mhm.
they analyze, reanalyze to make sure if they should keep it in the portfolio or they should like take it out. That's
Yeah.
part one. That's why they have to do part two is marketing. A lot of people like Jeffries. I look forward to what Jeffries upgrading or downgrading because it's tied to their credibility. So if they're basically saying Tesla to like this number and actually happens, people start following it, even though there's no time frame. There's people out there that want to make a name for themselves and they'll come up with crazy numbers like Tesla to $10 or Tesla to 700. Like Kathy's bold prediction was, I think after the split it was $1,500 or her Bitcoin was 100K, right? So
Yes.
stuff, a lot of it sometimes comes because people want to kind of stand out. And so for the longest time people thought Kathy was crazy until like 2020 when all her predictions were lining up, right? So then she became the hero. People were calling her the female Warren Buffett. Like now it's all looking stupid again, right? So
Yeah.
we don't know if she's actually smart or she got lucky.
Yeah. Yeah. Her situation is very unique for sure.
Yeah.
Yeah. One of my buddies, he has a YouTube channel as well, and he covers her stuff. Like it's a good investment. It's crazy, but it is what it is. All right, Mo, you ready to get into your class here? While you're setting up, I'm going to talk to the audience real quick one more time. Once again, guys, welcome to my channel. Welcome to our channel. Sorry, not my channel. Welcome to our channel, where money market truths. Please subscribe if you haven't done so yet. Just to be clear, we're making some changes here. Before we went on our Christmas break, we were doing a podcast per week. We're actually switching it up. We're going to do bi-weekly. So we have a podcast today where it's just going to be me and Mo. Next week, we will not have a podcast, but the following week, we will have a podcast. And once a month, we're going to have a guest. So we're going to have one episode, which is me and Mo talking about something or teaching. And we're going to try to teach a lot more often, including cover calls and vertical spreads, because that's something that I'm really into when it comes to trading, as well as some tips and tricks on how to become a better investor, talking about fundamentals and technicals and etc. But the second episode of the month will always have a guest. That's the plan, at least. So we're going to have different guests from different sectors in life or in the trading market or an investment market. They're going to come down. They're going to give their 2 cents on how they feel about the market. So you can learn about that. Like we had Afsha, which was our last guest for the year, which was a great episode. If you haven't watched it yet, make sure you go back and you watch it. She was a great guest, definitely great. So, right, Mo? She was
Yeah, this
amazing.
is
Like the information that she was giving was awesome. Like one of the things she said was she does not dollar cost average, and she explains why. If you're curious on why she would say that, go watch that episode. All right, Mo, you ready? Now
yeah.
we're
I
gonna
was
get
gonna
into
say,
trade.
like, if you guys have a guest that you think we should bring, let us know too. Or if you have someone that you think should come up here, please message us, DM us on or either my Instagram, Mark's, or just the podcast DM.
Yep, absolutely. All right, Mo,
Oh,
all yours. You ready? So, everybody, this is your free training on how Mo essentially trades options using supply and demand. And then I'm going to touch really quick before we end the episode on how I get these price predictions, which have been relatively accurate for the most part. I say I've been like 80% accurate on most of the price predictions that I've had last year. There were some that were wrong, but I'm going to show you how you can get your own price predictions and that we don't have to rely on anybody else. You should be able to rely on yourself on where you need to end up buying or establishing a position. So, all right, Mo, all over to you.
all right, guys. So let me quickly tell you, this is my first time doing this on the podcast. So we're going over supply and demand. Here's the goal. After the presentation, you should be able to become aware of what's out there apart from support resistance moving average. And the goal of that is a lot of people rely heavily on these indicators, but they're lag indicators. And what that means is a lot of times when they issue the signal of buying or selling or doing something, it's already too late. What we need to do is follow lead indicators. There's only two lead indicators, price and volume. And I only like to look at indicators that are able to accommodate both of them. If it's not that, then I don't. And that being said, I'm not saying moving average is bad or RSI is bad. You can use it with combination, but I wouldn't recommend using more than two indicators. So you can go supply and demand and moving average, supply and demand, RSI or MACD. That's up to you. So personally, I don't think any indicator is good or bad, but this is something that works for me. If you're someone who used to take a lot of breakouts and you'd get kicked out because the stock would retrace, you want to probably look at supply and demand. So quickly, what is supply and demand and what happens when it does, when there's a balance and imbalance? So a lot of times the market's just chopping like today. It's because the market is in balance. What that means is the buyers and seller are in agreement with the current price. So you get a balance. Today is not technically an balance day because we were actually going up, but the first, I'd say 2 hours was a balanced chop day. And that's because market buyers and sellers were agreeing. Every commodity, every open or closed marketplace, they all run on supply and demand, believe it or not. So we'll take a quick example. Let's take real estate market. The market's down right now. There's two reasons for that. Reason number one is there's less buyers because of the interest rate going up. People can't afford it. And because of this recession looming, a lot of people are just kind of like holding off on cash. So less demand. Second is that the suppliers, there's so many houses on sale right now in different areas that I'm looking. So because there's so many, if I want to sell my house faster, I'm going to lower down my price. So that's how demand and supply work. Either one of the areas is lacking or both are, and that's how the price fluctuates. As traders, we want to trade in a market that has a lot of imbalance where we don't agree, and that's how you get big moves where buyer and sellers don't agree. Now, before I actually get into it, the whole idea of supply and demand is basically trying to get in where the volume is. Me and you, we cannot move the price of a stock. What we need is big volume to come up for us to move the price. So, what's something that can bring big volume? People with a lot of money. It's usually institutions. So, it's bank, it's funds, or it could be someone in Saudi Arabia playing with 100 million and they target one stock at a certain price, which causes an increase in demand, which causes the run. Or the drop. So, in order for you to learn supply and demand, the first thing you need to know is what's a basing candle. A lot of people have a misconception that the basing candle is it's a small candle, it's a small hammer with long wick. A basing candle is a candle of an opposite color of what's happening. I'm making this as simple and I'm dumbing it down for myself too, because that's how I learn and that's how I try to teach. Because a lot of these charts when I first started trading used to confuse me. So things, I've always kept them simple. So what's an opposite candle of color? So if we're looking at a demand zone, demand signifies as buyers, supply signifies as sellers. So when it comes to demand, you think green candles. So what we look for a basing candle, opposite of green is a red. A basing candle will always be red. And the reason for that is we're looking where the sellers exhaust themselves. So in this case, we're selling, 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 selling. Right here, we get a massive green candle. So this now identifies as our demand zone. And we'll get into more. So I covered this already. We want to get into with bank, hedge funds, and institution. These are the people that come with real money. Our job is to get in with them. So you're trying to put your orders with them. The whole idea behind this, to just break it down, if I'm Bank of America and I like Boeing, and Boeing, let's say, is $200. Let's say I want to buy 10 million worth of shares. What I will do is I will put a limit order for 200 for Boeing. And that's why round numbers are so important when you're trading. And so what happened is all of a sudden 10 million is going into Boeing. The moment the orders start going through, the price of the stock will start going up. But the limit order is only for 200. So what ends up happening is as it starts going up, other people jump in because 200 is a big resistance level. And when it finally goes up, the limit order is no longer getting filled. Let's say the total amount of shares that they were getting were 100K and only 50K got filled in. There's an order sitting there for 50K for 200. So what we need to do is then watch. When the price goes back to 200, we already drew our demand zone. What I'll personally do is put in an alert. And the moment it gets 200, you put in your order with that. The risk is we can go down, right? How we can go down? Let's say the order sitting there is 50,000, but the sellers are putting an order for 10 million. So it will compensate for those orders. All those buy orders will get filled and will keep going down. But someone who uses demand and supply, you have a clear criteria on where I'm entering, and if the demand zone breaks, where I'm exiting. So there's no confusion. So you have a zone. If the zone breaks, you're out. There's no compromises there. So it's a very good system for people to manage their risk tolerance. What a lot of people do is they'll have like 6, 7 support resistances, and then one breaks, and then you're like, I'll wait till the next one, and then the next one breaks. You're like, I'll wait for the other. In our case, this is the demand zone. This is where we're taking the trade. If the demand zone fails, you're out. Most of the time, you'll lose 10 to 15%, 25% if you're following your rules. So I covered this, how are supply and demand zones. I gave you the idea of Boeing. So let's say Boeing got into at 200 and now the stock is 250. Boeing now is like, okay, we've made enough money. It was a trade for us. They're rebalancing whatever. They want to sell the stocks, right? Now, if they want to sell the stock, they'll put a sell order at 250. They're not just going to hit market order, because if they put in 10 million of market order, it's going to fill them at 200, 195, 190. They don't want to do that. They want to get 250. So they'll put an order for $250. If they put in for $250, what happened is all of a sudden there's an influx of supply, sellers. The price will go down, right? And every time it gets there, until those orders get filled, it'll keep going down. Our job is to get in with them on a put. And our exit would be if it breaks the supply zone. That's why I love it, because it's all about the zone. We get in if the zone bounces. If the zone breaks, we're out. So the risk management, there's no what if. It either happened or it don't. And sometimes it will break, and that happens maybe 4 or 5% since I've been trading this for about 2 years, where it will break the zone, and after 2 3 hours it will try going in. And if that happens, you always have an option of going in, but the time that it's happened, it's not worth it. So I wouldn't really bother about it. Like, quick example, last Friday I took a Tesla trade. I got in, and because it was 0 day, the first candle was green, the second was red, and I lost 50% on a 0 day, so I got kicked out. Then it broke the demand, then again I got back in, and then after that it ran like 600%. So that does happen. Very small percent, but it does happen. So how do you draw? I'm going to skip the PowerPoint after this. I'm going to give you a real example. So give me 1 second. So let's take Apple. It's everyone's favorite stock. Everyone knows about it. And feel free to put in any questions you guys have. I'll answer all of them. Okay, so I'm going to show you guys something. And I'll tell you why I got into this supply and demand in the first place. So this is Apple. And if I was, let's say, looking to buy it on a rally, what I would do is I would set this area as, let's say this area, yeah, around this 153 area as resistance, because what's the definition of resistance? It's basically where you can touch most of the candles, right? That's the point of resistance. And oftentimes what would happen is I would get in and I would get in on the break of resistance and it would break and then I would lose money because I'd get stopped out. And the reason for that was, if people who know supply and demand, they understand that this is actually a supply zone. So it's right above the resistance. So, and that happens often. And I didn't really talk about supply, but I will now. So remember one thing, a basing candle is a candle of an opposite color. So when it comes to selling supply, that's how you want to correlate. It's always a green candle. So in this case, what's happened here is we were going up, 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 and this was the last green candle before we started selling, meaning there is supply, there's sell order around here, which is why we basically look at this kind of stuff. So, Mark, is it making sense? Because you already know, but am I like doing a good job at explaining it?
Yeah, very good.
Okay. All right. So that's supply. So let me ask people, when you look at, let's say, this area here, do you guys see a demand zone? Do you see, remember, opposite color candles? So there's a bunch of green candles. Do we see a demand zone here? If there is, can you point out? Anyone? Okay, Danny, you know this. So tell me, where do you see a supply here? Sorry, I mean demand. So there's a bunch of green candles here. Yeah. So we would draw, and the way you draw the demand zone is you take the lower body and the lower wick. You never take the top wick. And the way I color them is I will mark them green. So this now becomes my demand zone. This is where you identify that this could be a potential demand zone. This is not a confirmation yet. This is just an identification that this could be it. Now we wait for the test. So look, it got tested here and then it ran right to the supply, right? And then it got tested again. And then it ran back to the supply. And then it got tested here and it finally broke. That brings me to the second point. A demand zone, every single time it gets tested, it makes it weaker, right? So if, let's say, Boeing example, if there's a 50,000 shares sitting on that demand, every single time the candle dips there, those orders get filled. So this thing got tested so many times. The highest probability demand plays are the ones that have not been tested yet or only once. So this was perfect. But did you notice when this went in, it went pretty close to the zone. And then you could tell that somewhere here are the prices for the buy. And here finally it tried making back up and it broke. So it brings me to another point. Mark, can you check the comments? I'm not sure. This person is blasting us
Oh
with.
yeah, no, that's Fuhat. It's keep going, man. That's Fuhat.
All
He
right.
he likes to troll, so just ignore.
Okay, cool. So when does when does a zone get invalidated? It gets invalidated when a candle gets formed outside the zone. So in this case, I'm zooming in. This is what invalidated the zone. So at this point, you will delete it. So that's how let's go another chart, and I'm going to see if anyone wants to kind of guess where the demand zones would be. So this is a daily demand zone here. Sorry, daily AMD chart here, and we're looking at trying to identify demand zone. So does anyone see a demand zone here? So we see a clear rally. We see the chart, this went from $60 all the way to $69. So anyone tell me where we see a demand zone? Danny, you can jump in if you want, bro. Anyone here see a demand zone? Okay, I'm gonna let you guys know, and we'll cover more of this in the future too. But look, this is a potential demand zone. One thing that we want to identify, and I'll show you, is yeah, you got it, Kivo. You want to identify if this is the true zone where it occurred, or you have to go back to make sure that is this the point of origin. In this case, it's not, because if you go back, this is where it actually originated. So let me redraw it. With some practice, you guys can become really good at it. So this is the demand zone. Always know where the origin is, because if you don't know the origin and you said it's here and it gets here, you might get stopped out. So always know where the origin is. In this case, it's here. So if you notice, this is where we identify, and this was the test. It jumped right off. So now let's see if we can find a supply zone. So let's quickly look, and how the easiest way to look at a supply zone is count rejection. So we got rejected here, okay? Then we got rejected here, then we got rejected here. Let's keep going back. This is the green candle which initiated the drop. So this is the origin of the drop. So what you do, and when you're doing a supply zone, you always take the top wick, but never the lower wick. In this case, there is no lower wick, so I'm going to color this red. So you guys will watch where it projected from. So do you guys see? This is where we identified it was a zone. This is where it confirmed that this what happened. So it rejected here once, rejected here twice, rejected here 3 times, 4 times. So most likely this is a weak zone. It's still a zone, but it's a weak zone because it's been tested so many times. And that's sort of what I look at. Now, Mark, do you think there's anything else? I'm going to just give them more example. Is there anything that you have questions about that you think they should know about?
Yes, the only thing I would like to touch on is the fact that a lot of people kind of sometimes get the supply and demand and support and resistance confused. Can you please explain what the difference is?
So a lot of people say that support and resistance are like supply and demand, which is not true, because support and resistance is based on historical data. So think about this. When we're drawing support, we say, okay, so it's jumped off here, here, here in the past. So without any test. Here we first identify it, then test it. In support and resistance, you could go back, draw a daily support that happened a year ago, and you could draw it, be like, this is where it should bounce. So it's based on historical data. There's no live data supporting it. Also, when support breaks, it becomes resistance. When resistance breaks, it becomes support. So vice versa. But supply and demand, that's not what happens. Once the supply breaks, you delete it. And then you look for new zones. Supply and data is based on actual real volume. That's why we test it. So right now we're doing daily, but when we're trading, we're looking at 30 minutes, 15 minutes, 5 minutes. We're trying to identify zones. So in this case, now I'll give you an example. You're sitting at $69. You're like, Mo, are we getting a 75 to AMD? Well, let's look at a shorter time frame, what's happening. So this now is 1 hour. If you look at it here, big waterfall here, opposite candle is this right here. So this is a supply zone. So a lot of people, bag holders that are stuck, they're going to try getting rid of it here. So tomorrow, what you need to watch out for is, does this area break or not? I'll give you a better example because I'm actually watching this for tomorrow. NVIDIA, this should be green. Sometimes I don't change it because I get lazy, but we're watching this. If this breaks tomorrow, we're looking into getting puts. So this is how simple it is. How would I play this now? Let's say you're getting a week out, right? You're getting a week out, so you're looking at Jan 20 puts for 155, let's say. The way I would play is, this candle is 160 and 160.17. There's a 17-cent. Let me just redo this. Hold on. Always have to make sure to see where it originated. Let's go daily first. So I like daily better because you want to be sure here. So this is daily, right? Let's go check an hour now just to make sure. No, I like daily. There's a gap up. So do you guys see there's a gap up? So I'm going to keep the longer range. So now on a 5-minute, how am I playing this? Like, this is a $5 zone. Usual cases, I wouldn't play it. But for tomorrow, I'm watching this very carefully because look, if we get, like, let's say CPI is amazing, right? We're only going to play this if CPI is amazing. If not, then this is going to gap down. Then we follow a different tactic. But let's say CPI causes this gap up. What I'm watching here is, let me ask you this, guys. What's the psychological number after 160 for NVIDIA? Like that number that comes to you where sellers could be there. Anyone? You're mute, Mark.
I said I have one, but I'm going to see if the audience has one.
I really hope it's making sense. So after 160 breaks, what's the forget support resistance, what's the psychological number that most people be looking at taking profits?
165 or 170.
Yeah. So what I'm watching, Mark, is I'm watching 165 here, and you can draw an alert there. So if we gap up, I'm looking to go short on this if we fail at 166, and then if we fail at 165. And I'm not going to wait for, ideally how you want to play is you want to wait for the supply to fail. So you need an independent candle outside the zone, right? For tomorrow's purposes, I'm seeing how this does and if there's any flow coming. So another thing that I haven't talked about, I told you guys, you can look at this and go MA, moving, all that fun stuff. I don't do that. I look at this and I watch flow. I'm watching any puts coming for chips. If anything comes from AND, SMH, I'm going for this. This stock, I'll show you something, and this is called relative strength. I'm kind of teaching you something else apart from that. So this is AMD. Since Monday, it gapped up all the way to 160 and it hasn't been able to break that. What's that telling you? There's massive sellers sitting here. Who are these people? These are bag holders that have been holding, and they know economy is getting bad, so they want to get out. Let me show you what a strong stock looks like versus what a weak one looks like. This is Amazon. While this thing has only done this, Amazon went from 81 to 95 in 4 days. That's what strength looks like, not this. This is what weakness looks like. This thing keeps getting sold here. Same thing with Tesla. It tried today, but like it's still doing better. So forget about this. We know this, but so this is the last 4 or 5 days. We gapped up solid to solid, pulled back, solid. So what does that tell you? Somewhere here, there's a supply. There's a seller somewhere here that keeps selling. You could just look at I'll show you. Look at this wick. Look at this wick. Look at this wick. Look at this. Look at this. There's sellers somewhere here sitting here. They keep selling around this area. If you look at it. So you can, I'll just do it with you guys here. You can just draw a supply here, 124 area. These guys, so look, this is where we identified the zone, sold here, sold here. We haven't been able to, so if you're like, Mo, I want to really buy calls on this, check above 125. 125 breaks, you can look at it. Teresa, I honestly, if I start talking about flow here, won't be able to explain it. This is like a 1 hour podcast, but um, supply and demand, you guys need to know, not the details. If you don't want to learn it, you can still use your own indicator, but just know there's powers beyond support and resistance that most people fail at. I was a breakout trader, and this is what happens. And I'm telling you because I know how premiums work. Apple is 150. I have a resistance at 152.5. When it would break, I would get in. Problem is, all of us are watching the same thing because we understand support and resistance. So at 152.50, the premium would go high because the IV's gone, because the demand's gone up. It would break, and right above that, there's a supply. I'd get caught up in the supply. It would go retrace back, and I'm kicked out. It would happen again and again and again. I can teach this to what, 25 people. I had about 65 people last week. I can teach about 100 people supply and demand, and all of us can draw a 30-minute demand zone on AMD, and it will be exactly the same to the decimal. It will be the same. But if I take 10 people and told them to do a support and resistance on AMD, all of us will come up with different ones. That's tells you like why certain things are approximation. When we're scalping, trading weekly or even 2 week or even a month, there is no such thing in approximation. We need stuff to the T, because if we mess this up, there's big money involved. So for zones, you're correct. I look for, so the market will give you zones already. So you can most likely, every ticker you can give me. So in this case, AMD, we found a zone and it's getting tested. So we can trade this. So you don't ever have to wait. Most of the time it's tested. When you have to wait is if you're doing intraday trading, which is a little bit more complicated because you have to do live zones. And then you have to see, okay, so this is a zone. Let me see test. I would take trades on the first test. That's what I do. So then you have to do live. But if we're doing swing trading, you can go daily, hourly, 4 hour. You can pick whatever you like. But don't like, for instance, let's say we're trading this on a Friday, okay? This zone doesn't help you. It's a 6 point zone, right? So you could be like, okay, then you have to go on a 30-minute zone. So your zone will depend on the time frame. If I was to take NVIDIA short, I'm personally looking at it at March 120, 130 put. So I'm looking at like a 2 month output. So that's why I'm okay with looking at daily. But I think that sums up enough, and we can keep going back to it. We can do intraday next time, Mark. I don't want to confuse them.
Yeah, that sounds good. Do you guys have any questions at all when it comes to supply and demand? And does it make sense? Do you guys understand how to find a supply and demand zones? I know there's like a 5-second delay because I'm watching this here on my computer screen. So, all right. So I think that was good. Like I said, everyone remember, trading does come with a lot of high risk. Be careful on who you listen to as well when it comes to trading, because a lot of people on Twitter, online, who will sell really expensive courses or tell you that they're successful traders without proving it. So just be careful out there. Again, if you're brand new to trading, do not trade during CPI. Can you agree with me on that, Mo?
Yeah, it's a recipe for disaster, because if we get a fade move, so what happens is, Mark, any number that comes on CPI, they came after hours. So you need low volume to break, right? And so if you're looking at support resistance, whatever the hell you're looking for, it most likely will break. And then the highest chance where I say we can make the most money is how most people get bagged when you get a fade move, an opposite move. Because people are like, what just happened? It broke my resistance. Why is it going down? It's because it broke without enough volume. And when the market opened, it doesn't accept it. They don't accept the price because the volume is much higher. The participants aren't disagreeing, imbalanced, so it'll drop. So yeah, new traders should stay out.
Yep. All right. So I'm going to take over on this part real quick. This is for everybody who's interested in investing and how to get these price targets, where to enter. First and foremost, you need to understand fundamentals. I do recommend, there's a Warren Buffett book where it kind of breaks down how he evaluates stocks. There's also a bunch of I guess, YouTube videos out there to try to teach you how to learn fundamentals. If you're interested in a good YouTube channel, someone who actually talks about stocks and goes in depth and when it comes to the numbers and et cetera, check out Capital Mindset. Shout out to you, Fabio. He's one of the few YouTubers that I've seen out there who literally will take a company and break it down for like an hour live for y'all to view. Really good at like analyzing stocks. So make sure you check out that YouTuber as well. But first and foremost, you need to understand fundamentals. Look at who the CEO is. Do some research on the company. It's like doing a research paper for college. All right. See how their cash flow is. See if they have debt. See if what their returns are every single quarter. Just do research and look at the overall company. And I would say when you first start off, try to stay away from unprofitable companies. And I mean, unprofitable companies like the Palantirs, the SoFis, those are all growth stocks. And there's a reason why they're down 70, 80%. You don't want to invest into those during a bear market. It's just not smart. Those stuff usually run pretty well during a bullish run like we had in 2020, hence the reason why those stocks are so popular. And they're not that popular anymore, but yet people are still telling you dollar cost average on them. And I think it's ridiculous because at that point, SoFi was at $20. I think Palantir was at $20. Terrible investment. If you look at a company that were not profitable, if you look at fundamentals and just literally dive into the books, you could tell that this was not going to last long, especially once we got into the environment that we're in now, in bear territory, recession, inflation, and et cetera. Those stocks don't do very well. So that's why WWE was doing well. That's why Procter & Gamble relatively did well. Berkshire did pretty well. So that's the first and foremost thing that you want to learn. Secondly, after that, you want to dive into the technicals, and that's what I'm going to cover here. So Mo just talked about the supply and demand. And that's actually how I end up getting my price targets. The only difference is that I did it on a monthly or weekly time zone. So let me pull it up real quick to show you a chart. The first one I'm going to show you is my Tesla chart. Now, this is a chart that I've used multiple times on this channel and on my personal channel, Tesla. And this is the chart, and this is the reason why we were saying that Tesla is going to go to 150. That was our target for last year, right, Mo? I said 165. I think you said 150, and it didn't hold. And then obviously it ended up going down further. But I want to show you the chart because this I actually charted out when we were at the $300 range. Now, again, at that time, I remember everyone was buying at 300. And it's not that I don't like Tesla. I think it's a great company. I just thought that it was extremely overvalued. It has a cult-like following. And there was a lot of red flags that I'm pretty sure I posted the red flags here as well. So there was a lot of stuff that I annotated on this chart and I was looking out for. And people were telling us that we were stupid. We had no idea what we're talking about, that Tesla would never drop below 300. It clearly did. And the first demand zone that I had plotted out, these were all in the weeklies. I have them crossed out here, but I found the demand zones the same way that Mo just explained to you, but I did it on the weekly. And this is before, obviously, the candles went through all these demand zones. But the first one that I plotted was between 227 and 251. It was just here prior to all of this. And there was a key a key resistance level here that it kept getting rejected here. So there's only so many times they can try before it ends up just giving up. So clearly we were in a bear territory market, inflation, et cetera. There's a bunch of stuff going on. So it was very clear that Tesla were likely to sell off. I never bought here at this weekly demand zone. It was the very first demand zone. I just plotted it. It blew right through it. You could tell by the price action. There was no rejection, no nothing within this demand zone. It blew right through it. And then it tried to come back up. And then the bottom of the demand zone ended up being the resistance. It got rejected again. Then it went to 188 to 207. That was the first time I actually bought Tesla. That was my first entry to try to establish a position, was at 188. I remember most specifically said, I don't think it's a good idea. You said it's still 150 is definitely going to go there, which I also felt it was going to go there. But again, we can never time the bottom. That's the thing. You can never time a bottom. You can just make predictions. My prediction was at that time, especially looking at Tesla, I like the way how Tesla sometimes would drop to a certain level. People would freak out. There would be FOMO and people would buy it, and then it would bounce back up for a temporary relief rally before it makes another leg down. So I was expecting the 188 to be one of those levels where it would shoot up. It got down there. I bought it. It shot up a little bit, and then it just completely dropped again. There was a key support level that was been there for a while, and that's just doing support and resistance. And that key level was that's the 165 range that I was talking about, and Mo was talking about the 150 range. Clearly blew right through it, no longer valid. It's now a resistance level. The next one was 131 to 148, which is basically the 150 mark that Mo was talking about. That's where I bought my second share. Again, price action did not hold up here. Literally just blew right through it. And I literally sold all my shares. I took a small L, only had 3 shares at that point, because ultimately, I think, Mo, you and I both agree, we think ultimately it's going to get here to the real value, which is in the 60s, correct?
Yeah, I think a 65 or 68 is what I had. I'm just trying to see.
Yep, that's pretty much what I had. And I had all this stuff again. This was plotted 6-7 months ago. So it blew through all of these demand zones. It came down. There's actually a small little support here. That's the reason why you see it coming down, and it started. It bounced right here, and buyers are coming in. But if you look at just historically, what has Tesla been doing? It would hit levels, bounce temporarily, make another leg down, go up, make another leg down. It kept making higher lows. So I'm expecting to see that Tesla is probably going to go back up to around the 130s. If it cannot hold or break through that, it's a good chance it's going to make another leg down, which is what I'm expecting, to be honest. 100 is probably going to be the next like little level it would test that. Yeah, right here, like I said, is a little small support, and then it will probably break down. So that's usually how I get my price targets. And I just go by demand zone by demand zone by demand zone. That's how I kind of do it. I'm not going to sit here and give you the bottom of the demand zone, because you never know. Sometimes that bottom may not actually hit. I would give you the closest demand zone, and it's up to you whether or not you want to end up entering into that position. I like to just establish small positions at the top of the demand zone. I'll give you an example. If Fuhad is still here, I know he likes Berkshire. I'm a huge Berkshire fan as well. I actually own Berkshire. Oh, here's Nike, for example. It's just popped up. I could show you the demand zone I had for Nike, which was $63 to $74. And that was on a monthly. So if you go to a monthly, you most likely will see a demand zone. Yep, this was a demand zone right there that it actually broke through at one point. That's actually invalid now. But there's a good support where it actually bounced off, which was at $81. But let's go to Berkshire. Okay, it's a B. I think it's a B one. Yes, there you go. All right. I have notes on this one. Perfect. So I plotted out all the demand zones for Berkshire, and this is exactly where I established my first position right here, which was around the 170. So it did come down. So once I actually created this was on is it on a weekly? I think it's supposed to be on the weekly. Yep. There you go. I had this demand zone right here plotted, and it did come into it, and that's where I established my first position. So I bought several shares here. It bounced off and it went back up, and it's looking like right now it's close to a possible resistance / take profit. So what I was actually expecting was for it to come down here, maybe move sideways for a little bit, and then drop down to the next demand zone, which is this area here. But I wasn't planning on buying until it actually gets down here. It looks like, yep, at 225 to 232. It never happened. And that's why I say you can never time the market. You can just look at the demand zones and the levels and decide whether or not you want to enter there. I've seen too many people, what they end up doing is basically just, if you have $10,000, you see one demand zone, you just dump the whole $10,000 in there. Or if you see that Tesla dropped 10% today and you're like, man, this must be cheap. I'm going to put $10,000 in it. Do not do that. Be very, very careful how you allocate your money. It's okay to have cash sitting on the side, especially, again, we are in a very weird environment. Okay. Inflation, recession, that stuff means something. Macro and microeconomics. All right. Usually Berkshire, I'm sure, would be all the way back up here. In any other environment, if we're in bullish territory, it will still be up here. But clearly, this is when we started selling off, and this is where I end up actually getting in. So I got several shares there. I hope that makes sense. Does everyone understand what I'm talking about when it comes to getting those price levels? You could do it with so many different stocks. I think I got AMD as well. Let me put AMD here, because that's another stock. When it was at $100, I think we called 65, and I think yep. See, this was the weekly demand that we had. Again, this was plotted months ago, and I think AMD was somewhere up here. It came down, as you can see, it literally went inside of the demand zone that we plotted. It touched in and it bounced off. It's currently at a resistance level. came down again, and now it's looking like it's going to try to track back up to the $70 range, and it could potentially get rejected again and go back down. But that's how I determine my levels. I don't just go by the story. I don't just go by the fundamentals, because the fundamentals could be great, but again, look at the environment that we're in. That stuff matters. So remember, get proficient at understanding fundamentals first, looking at like their quarterly earnings, understanding what each line means, and then from there, start looking at technicals and then identifying where you want to buy at. And sometimes it may take some time for you to, I guess, wait for the price to get to where it needs to go, but just take your time. And that way you don't have to rely on someone else giving you price predictions, because honestly, they're probably just doing supply and demand as well. Or they're doing the Fibonacci, or they're just doing support and resistance. Those are the three that you really can get like good price targets, because honestly, if you do like the support and resistance, a lot of time they're actually on the bottom of the demand zones. Would you agree with that, Mo?
Yeah.
That sometimes when you plot this, supply and demand. But again, the further out you go, the better. Don't go on a daily. Don't go on a 5-minute or a 4-hour chart to try to determine your entry points for your investments, unless you're just trying to do swing trading. If you're trying to invest, just wait for those crucial levels. And once again, if it blows through the demand zone, that demand zone is no longer valid. Okay, it's no longer, it's done. It's finished. All right. That's pretty much all I got. Do you guys have any questions at all when it comes to how to identify price targets for the stocks? Because I made that mistake, y'all, with Meta. I know you guys have heard me talk about this multiple times. I did my demand zone of Meta, got FOMO when it hit $300, and I threw $3,000, I think, $3,000 that I had spare into Meta, and clearly that didn't work out. So just be careful. Stay away from any companies right now that really are unprofitable. That's just my recommendation. Do what you want to do. I mean, because I know a lot of them are beat up to the point where it may make sense now to buy some of these growth stocks where you see like, where's SoFi these days? $3, $4 or something, I don't know. Or Palantir like $6, $5. Sometimes it makes sense to buy it because it's so beaten up if you're willing to hold it forever and if you're okay with it actually going to zero. So that's another thing to consider. So just don't rely too much on these hype stocks. In fact, I would recommend stay away from these hype stocks. If I could go back when I first started investing, I wish I would have just stuck to dividend stocks. And I wish I would have stuck to real good blue chip companies or profitable companies, Hershey, WWE, Procter & Gamble, Berkshire, even BlackRock. BlackRock sold off significantly, but right now even BlackRock is a pretty decent price. So again, though, we're in a bear market, have cash, deploy your cash slowly. That's my best recommendation. So you're better off buying when there's an uptrend versus a downtrend. Because if you're buying at a downtrend, you are not buying the dip, y'all. You're not. You're buying the downtrend. You're buying a falling knife. I hate when these gurus out there telling you, buy a dip, buy the dip. No, don't. Wait for it to reverse. Wait for when the macro and the microeconomics make sense, then start scaling in. So that's all I got. Mo, you got anything else?
Yeah, I want to add. So this topic of flow keeps coming up. Teresa asked about it too. We're working on figuring out a way to have a class just on flow. So just hang tight. We got something coming.
Yeah, like I said, this year we're really trying to add more value. We're not going to just talk about whatever the hottest, greatest story is. We will still do that. We'll still do that. We'll talk about the hot takes, in the beginning, but we're going to try to offer something. Hence the reason why we're doing it bi-weekly now, and that's the reason why we're doing 1 hour, so it can provide more value and show you guys how to, the people who are interested in trading, and then the people who are interested in investing. So first and foremost, trading is very volatile, is very dangerous. Be careful. 98% of people fail. It is what it is. It's not easy. There's no get rich quick course scheme or anything that's going to make you proficient at becoming an overnight success. A lot of people made a lot of money in 2020 by just pure luck and because the market was bullish. It didn't matter what you got into, it skyrocketed. This is not the environment. But I would say this, Mo, I think if you can become a proficient trader in this environment, you'll be good for the rest of your life. But it takes skills.
You're good.
It takes skills, yeah. But investing, stick to investing. It's my personal opinion for like 99.9% of people. Just stick to investing. And more than anything, if you have no interest in learning about individual stocks, stick with ETFs. I literally hold my ETFs. I have 2 Roths ETFs in there. I have a Fidelity account. with only dividend stocks in there. And then I have the play account, which I used to show on my channel. That is my spare money. That's the reason why I buy stocks. And I do take profit when I feel like there's time to take profit. I'm looking at Berkshire. It's getting to a resistance level. I may take profit, wait for it to sell off again, then we'll buy back in. There's nothing wrong with that. I hate when people tell you just to hold on to the stocks forever. Look at what happened with Meta. If you bought in 2017, you're back at 2017. It is okay to take profit, or at least shave off some of your shares. I have a friend who has over 800 shares of Tesla. At the high, I was telling him he should sell at least 200 to 300 shares. And I don't know if he did or not, but look where it's at now. So that's all I got. Anything else?
Nope, that's it.
All right, everybody. Listen, again, thank you guys so much for tuning in. We had 20-some people that actually stayed consistent. That's awesome. Thank you guys so much. And once again, make sure you share, save this video if you want to go back to see how to use the supply and demand. I gave you guys, I guess, the secret sauce and how people are getting these price predictions. There is no crystal ball. Don't believe that stuff. There's no what is it called? We have exclusive rights to anything.
No proprietary secret.
Yeah, there's no proprietary.
Yeah,
things. There's no such thing. So just be careful out there. Until next time, y'all. Peace out, and thank you for tuning in. Bye-bye.